The thermal paper rolls through the machine without any interruption. It records numbers that represent equity in companies that barely exist in physical form. The morning light hits the rows of beige plastic phones. Each station is a silent promise of wealth built upon the total absence of oversight. Penny stocks are the discarded remnants of the market. They trade in the shadows of the big boards, where regulations are a distant, unenforceable memory. The script is more important than the product. It is a sequence of words designed to bypass logic and activate the primitive desire for sudden gain. Young men fill the room. They possess high ambition and a complete lack of financial history. They are the perfect instruments for a systemic extraction. The outbound calls begin simultaneously. The noise creates a physical pressure that vibrates against the thin glass walls of the suburban office park suite. On the other end of the line, a retiree considers a prospect. The distance between a quiet kitchen and a boiler room is bridged by a lie. Capital begins to flow inward. It does not arrive in large blocks, but in thousands of small, untraceable deposits from across the entire country. The firm grows. Architecture reflects the new reality. Marble and mahogany are installed to provide the illusion of a century of institutional stability. Success is measured in hardware. Faster computers and more phone lines are added to handle the increasing volume of the fabricated market demand. The pump is the first phase. The brokers buy massive quantities of a worthless stock, creating a false signal of rising investor interest. Momentum becomes its own justification. As the price climbs, the urgency of the sales pitch intensifies to prevent any participant from looking closer. Luxury cars appear in the parking lot. They serve as physical evidence that the system works, silencing the doubts of those within the firm. The internal culture shifts toward excess. Discipline is replaced by a shared understanding that as long as money flows, the rules do not apply. The offshore accounts are established. These digital repositories are located in jurisdictions where the light of American law does not easily reach. Large amounts of cash are physically transported. The weight of the currency is a logistical challenge that requires increasingly creative and illegal solutions. Regulatory bodies operate at a pre-digital pace. They review documents from months ago, while the current fraud evolves in a matter of seconds. The dump begins when the internal targets are met. The firm sells its entire position, triggering an immediate and catastrophic drop in value. Investors try to sell, but there are no buyers. The liquidity that was once promised has evaporated, leaving only worthless paper in its wake. Inside the firm, the celebration is quiet, the profit is secured, and the focus shifts immediately to the next shell company in the queue. Complacency is the greatest ally of the scam. As long as the broader market is rising, the specific failures of small stocks go unnoticed. The paper trail is immense. Every trade leaves a mark, but the sheer volume of data acts as a natural camouflage for the illegal activity. Private investigators begin to watch from the periphery. They photograph the arrivals and departures, looking for the physical patterns of an institutional breakdown. Paranoia begins to seep into the office. The shared secret that built the wealth now becomes a source of individual vulnerability for every employee. Shredders run through the night. The destruction of evidence is a physical process that produces a snow-like drift of irrecoverable history on the floor. The first subpoenas are served. They are quiet documents that carry the full weight of the federal government, marking the end of impunity. Cooperation becomes a commodity. Those who were once loyal colleagues now calculate the value of their testimony against the length of their potential sentences. The assets are frozen. In an instant, the houses and cars and accounts are transformed from personal property into the state's evidence for a trial. The courtroom is a place of forced sobriety. The charisma that once sold worthless stocks has no effect on the cold logic of the law.
The victim impact statements are filed in boxes. They represent the actual cost of the excess, measured in lost homes and delayed retirements. The firm's sign is removed from the building. It leaves a faint outline on the stone, a ghost of an institution that never truly existed. The headlines move on to the next scandal. The public memory is short, but the structural flaws that allowed the scam remain in place. New technology replaces the old. The speed of the market increases, making the next iteration of the fraud even harder to detect and stop. The architects of the scam serve their time. They eventually return to a society that often mistakes their infamy for a form of expertise. Regulation is always reactive. It is a series of patches applied to a system that was designed for growth, not for total moral integrity. Maintaining clarity in these complex financial structures ensures that the record remains intact. Those who observe the patterns are better prepared for the future. The pink sheets are still printed. The names of the companies change, but the fundamental mechanics of the deception remain remarkably consistent over time. Greed is a constant variable. It does not require a specific era or technology to function as the primary engine of financial breakdown. The final report is 1,000 pages of technical analysis. It describes a failure that in reality was driven by very simple human impulses. The cycle prepares to repeat. Somewhere a new office is being leased, and the first phone lines are being installed for a new generation. The legacy of the scam is a permanent erosion of trust. Every subsequent market fluctuation is viewed through the lens of potential manipulation. Money does not vanish, it only changes hands. The wealth extracted from the many is eventually absorbed into the broader, legitimate economy. The institutions that failed to intervene are restructured. New departments are created to address the specific tactics used in the previous decade. The brokers who were not charged move to other firms. They carry the techniques with them, adapting to the new regulatory environment. The market is a machine that requires fuel. Sometimes that fuel is genuine innovation, and sometimes it is the collective hope of the uninformed. Truth is often revealed only after the capital is exhausted. The systemic failure is not the scam itself, but the delay in its discovery. The victims do not usually recover their losses. They are left with the quiet realization that the system they trusted was fundamentally indifferent to them. The lights in the office tower finally go out. The vacuum created by the firm's collapse is quickly filled by new entities with similar ambitions. History records the names of the perpetrators. It rarely records the names of the thousands who provided the capital that made the excess possible. The mechanism of the scam is timeless. It relies on the belief that one can achieve an extraordinary result without an extraordinary effort. Every boom contains the seeds of its own destruction. The Wolf of Wall Street was simply a more visible symptom of a broader contagion. The final tally of the fraud is never fully calculated. The secondary effects on families and communities are too diffuse to be easily measured. We live in the aftermath of these events. The rules we follow today were written in response to the failures of the previous generation. The machines used to facilitate the scam are now museum pieces. They serve as mechanical reminders of a time when the world was smaller. The current market operates with a new set of risks. The speed is greater and the complexity is higher, but the underlying motivation remains unchanged. Silence returns to the boiler rooms. The echoes of the aggressive sales pitches are replaced by the hum of cooling fans and empty space. The system is a reflection of the people within it. Its failures are our failures, and its successes are built upon our collective participation. We look back at the era of the wolf with a mixture of fascination and judgment. It serves as a cautionary tale for any period of growth. The weight of the system is always present. It is felt in the moments before a collapse, when the silence is more telling than the noise. The record remains. It is a series of documents, numbers, and testimonies that describe a moment when the system was tested and found wanting.